Will inflation return? Low inflation underpins today's economic policy. Policies. Government should prepare in case it doesn't last. Economists love to disagree, but almost all of them will tell you that inflation is dead. The premise of low inflation is baked into economic policies and financial markets. It is why central banks can cut interest rates to around zero and buy mountains of government bonds. It explains how governments have been able to go on an epic spending and borrowing binge in order to save the economy from the ravages of the pandemic, and why rich world's public debt of 125% of GDP barely raises an eyebrow. The search for yield has propelled the S&P 500 index shares to new highs. Even as the number of Americans in hospital with COVID-19 has surpassed 100,000. The only way to justify such a blistering hot stock market is if you expect a strong but inflationless economic rebound. In 2021 and beyond. And as we explained this week, an increasingly vocal band of dissenters thinks that the world could emerge from the pandemic into an era of higher inflation. Their arguments are hardly overwhelming, but neither are they empty. Even a small probability of having to deal with a surge in inflation of even a small probability of having to deal with a surge in inflation is worrying. Because the stock of debt is so large. And central bank balance sheets are swollen. Rather than ignore the risk, governments should take action now to ensure themselves against it. In the decades since Margaret Thatcher warned of a vicious cycle of prices and wages that threaten to destroy the society, the rich world has come to take low inflation for granted. Before the pandemic, even an ultra-tight jobs market could not jolt prices upward. And now armies of people are unemployed. Many economists think the West, and especially the Eurozone, is heading the way of Japan, which fell into deflation in the 1990s and has since struggled to lift prices far above zero. Predicting the end of this trend is a kind of apostasy. After the financial crisis, some hawks warned that bond buying by central banks, known as quantitative easing or QE, could reignite inflation. They ended up looking silly. Today, the inflationists' arguments are stronger. One risk is of a temporary burst of inflation next year. Temporary burst of inflation next year. In contrast to the period after the financial crisis, broad measures of rich world's money supply have shot up in 2020 because banks have been lending freely. Stuck at home, people have been unable to spend all that money, and their bank balances have swelled. But once they are vaccinated and liberated from the tyranny of Zoom, exuberant consumers may go on a spending spree that outpaces the ability of firms to restore and expand their capacity, causing prices to rise. The global economy already shows signs of suffering from bottlenecks. The price of copper, for example, is 25% higher than at the start of 2020. The world should be able to manage such a temporary burst of inflation. But the second inflationist argument is the more persistent price pressure will also emerge.
But more persistent price pressures will also emerge as structural disinflationary forces will also emerge
As structural disinflation forces emerge.
as structural disinflationary forces
Go into reverse.
In the West
In the West
and in Asia, many societies are going to reverse. In the West and in Asia,
and in Asia,
many societies are aging,
many societies are aging,
creating shortages of workers.
creating shortages of workers.
For years,
For years,
globalization lowered inflation
globalization lowered inflation by creating a more efficient market,
creating a more efficient market for goods and labor.
for goods and labor.
Now, globalization
Now globalization
is in retreat.
is in retreat.
Their third argument
Their third argument
politicians and officials are Their third argument is that politicians and officials are complacent.
is that politicians and officials are complacent.
The Federal Reserve says it wants
The Federal Reserve says
inflation to overshoot complacent. The Federal Reserve says it wants inflation
to overshoot its 2% target
to make up for lost ground.
to make up for lost ground.
The European Central Bank,
The European Central Bank,
which was expected to announce more stimulus
after we went to press,
may yet follow suit.
Weighed down by the need to pay for an age
May yet follow suit.
weighed down by the need to pay
For an aging population
for an aging population and healthcare.
politicians will increasingly favor big budget deficits.
Politicians will increasingly favor big budget deficit.
Might these arguments
Might these arguments
prove correct?
prove correct?
A temporary rebound in inflation next year
But
is perfectly correct. A temporary rebound in inflation
a temporary rebound in inflation
next year
next year
is perfectly possible.
is perfectly possible.
At first, it would be welcome.
At first,
Sign of next year is perfectly possible. At first, it would be welcome.
at first it would be welcome.
A sign economies are recovering from the pandemic.
A sign that economy
At first, it would be welcome. A sign economies are recovering from the pandemic.
a sign that economy is recovering from the pandemic.
It would inflate away
It would inflate away
a modest amount of debt. Pandemic. It would inflate away a modest amount of debt.
a modest amount of debt.
Policymakers might even breathe a sigh of relief,
Policymakers might even breathe a sigh of relief,
especially in Japan and the Eurozone,
especially in Japan and in the Eurozone,
where prices are falling.
where prices are falling.
The rapid changes in the pattern of consumer spending may have muddied the
Though rapid changes in the pattern of consumer spending
may have muddied the statistics.
may have muddied the statistics.
The odds of a more sustained period of inflation remain low. But if the odds of a more sustained period of inflation
The odds of a more sustained period of inflation
remain low.
remain low.
But if central banks had to raise interest rates
But if central banks had to raise interest rates
to stop price rises getting out of hand,
to stop price rises getting out of hand,
the consequences would be serious.
the consequences would be serious.
Markets would tumble,
Markets would tumble,
and indebted firms would
and indebted firms
falter.
will falter.
More important,
More important,
the full cost of the state's vastly expanded balance sheet. Important, the full cost of the state's vastly expanded balance. More important, the full cost of the state's vastly expanded balance sheet.
the full cost of the state's
The full cost cost of the state's vastly expanded balance sheet.
Vastly expanded balance sheets.
Both government's debt and the central bank's liabilities
Both government's debts and central bank's liabilities
would become alarmingly apparent.
would become alarmingly apparent.
To understand why
To understand why
requires peering for a moment
requires peering for a moment
into how they are organized.
into how they are organized.
For all the talk about locking in
For all the talk about locking in
today's low long-term interest rate, for all the talk about locking in today's low long-term interest rates,
today's low long-term interest rates,
government's dirty secret
government's dirty secret
is that they have been doing the opposite,
is that they have been doing the opposite,
issuing short-term debt
issuing short-term debt
in a bet that short-term
short-term
rates
interest
remain
rates will remain low.
The average
The average maturity
maturity
of American
for
treasuries,
example,
for example,
has fallen from 70 months
has fallen from 17 months
to 63.
to 63.
Central banks have been making a similar wager.
Central banks have been making similar wagers
Because the reserves they create to
because
buy bonds, central banks have been making a similar wager. Because the reserves they create
the reserves they create
to buy
to buy
bonds
bonds
carry a floating vanilla wager. Because the reserves they create to buy bonds carry a floating interest rate,
carry a floating interest rate.
they are comparable to short-term borrowing.
They are comparable to short-term borrowing.
In November,
In November,
Britain's fiscal watchdog warned
Britain's fiscal watchdog warned
that a combination of new
issuance
and QE
and QE had left the state's debt service costs
twice as sensitive
to short-term rates
as they were at the start of the year,
as they were at the start of the year,
and nearly 3 times
and
as much
as much
as in 2012.
as in 2012.
So while the probability of an inflation scare
So while the probability of an inflation scare
may have risen only slightly,
its consequences would be worse.
its consequences would be worse.
Countries need to insure themselves
Against this tail risk
by reorganizing their liabilities.
Governments should fund fiscal stimulus
Governments should fund fiscal stimulus
by issuing long-term debt.
by issuing long-term debt.
Most central banks should start an orderly reversal of QE, and most central banks should start
Most central banks should start
an orderly reversal of QE,
an orderly reversal of QE
and instead loosen monetary policy
and instead loosen monetary policy
by taking short-term interest rates negative. Monetary policy by taking short-term interest rates negative.
negative.
Finance ministries should incorporate risks
Finance ministries should incorporate risks
taken by the central bank their budgeting,
into their budgeting,
and the Eurozone
and the Eurozone
should find a better tool than QE
should find a better tool than QE
for mutualizing the debts of its member states,
for mutualizing the debts of its member states,
shortening the maturity of the state's
shortening the maturity of the state
balance sheet as in 2020. Shortening the maturity of the state's balance sheet
of the state's balance sheets
as in 2020
as in 2020
must only ever be a last resort
must
and should not become the model 2020 must only ever be a last resort
must only be a last resort
and should not become the main tool of
and should not become the main tool
economic policy.
of an economic policy.
The chances are
The chances are
inflationistas are wrong.
that inflationists are wrong.
Even the arch monetarist Milton Friedman, who inspired the wrong Even the arch monetarist Milton Friedman,
Even the arch Even the arch monetarist Milton Friedman,
who inspired Thatcher, admitted late in his life that the short-term link
between
the money supply and inflation
had broken down.
But the COVID-19 pandemic
has shown the value of preparing
for rare but devastating events.
The return of inflation should be no exception.